Let's talk about shipping. So when we use the term shipping, we're talking about shipping or freight or delivery. All of these mean the price that it costs us to get our inventory to us or to our buyer. So let's talk about the terms. It will either be listed on the invoice as FOB Shipping Point or FOB Destination. FOB stands for Free on Board, and this is what's going to tell us who's responsible for the payment and how are we going to account for it. So let's look at the top one, FOB Shipping Point. FOB Shipping Point means that the items, we're going to be talking about selling books, so the books change hands at the point of shipment. So we're going to talk about three different companies here, or two companies and one person. How about? We've got Pearson Publishing selling to Barnes & Nobles and then selling to you. So if we are Barnes & Noble and we purchase our books from Pearson Publishing, then we are buying inventory. If we have FOB Shipping Point, that means that when Pearson shipped it to Barnes & Nobles, it changed hands at Shipping Point, which means that the whole time that it traveled to Barnes & Nobles, it belonged to Barnes & Nobles, which means that they paid the shipping. So an easier way to remember that is FOB Shipping Point means that the buyer pays. Let's go over why again. FOB Shipping Point, the buyer pays because it changed hands way back over here. So it already belonged to the buyer the whole time it was traveling, so the buyer pays. If the buyer pays, then that means that they are buying inventory. If they're buying inventory, that cost of shipping is just another cost of that inventory. So they actually add it to inventory. That's why we see that this freight cost is debited to merchandise inventory, because it is part of the inventory. It becomes part of that inventory. Now, if it would have been FOB Destination, so let's say we're still Barnes & Nobles and we still purchased some books from Pearson Publishing, but it was FOB Destination, in this case, Pearson Publishing paid, because here they sent the books, it traveled all the way to us, and the whole time it was traveling, it still belonged to Pearson Publishing. So they would have to pay. In that case, us as Barnes & Nobles does nothing, but the seller would actually account for that, and for them, they had to pay that shipping in order to make the sale to us, so it is a selling expense. Basically, it was a price that they had to pay in order to make the sale, and so it's a selling expense. So if you're buying it, you debit merchandise inventory. If you're paying the shipping when you're selling it, you debit a selling expense. You can call it delivery expense, but it falls underneath the selling expense. Okay, so let's recap this right here. Who pays shipping? Well, it depends. If it's FOB Shipping Point, the buyer pays. If it's FOB Destination, the seller pays. What determines if the shipping cost is added to inventory or categorized as a selling expense? Well, when the buyer is buying inventory, it's debited to inventory. When the seller is selling the inventory and pays for it, it is delivery expense, which is a selling expense. So let's talk about this example exercise and see how this shipping affects the total settlement price of these items. So it says to determine the amount to be paid in full settlement of each of the two invoices and assume that the credit for returns and allowances was received prior to payment and that all invoices were paid within the discount period. So in letter A, we've got the merchandise that costs $4,500 minus 1% of $4,500. So we'll include that in our settlement price. And then the freight that was paid by the seller. So if it's FOB Shipping Point, then that means that the buyer needs to pay. So we're going to actually add this into our cost because the buyer is responsible for this. So we'll add 4,500 times 4,500 times 0.01 and subtract out that 1% as you learned how to do earlier. And then do the same thing with the $800 and reduce it by 99% of $800, and then add back the $200. The important thing here is to see that we do not take a 1% discount on shipping. There is no discount on shipping. And so your total amount would then be $38.63. So you've got a purchase of $44.55, which is your $4,500 minus the $4,500 times 1%. You take out your return, which will be your $800 minus $800 times 1%, and then you add back in the cost of the shipping. That is because it is FOB Shipping Point. That is because the buyer is paying the shipping, so they've got to pay that amount. Doesn't matter that the seller originally paid it, they're going to bill it to the buyer if it's FOB Shipping Point. So let's look at letter B. This one's FOB Destination, meaning that that seller is the one that's actually going to pay that, so we won't add it. So it'll be everything the same as what we just talked about, except it will be your purchase of $4,900, and then you subtract out your, in this case you got a 2% discount, and then less return, and you subtract out your 2%. And then notice we do not add back shipping because that's going to be paid by the seller. So that's how some of the ways that this FOB Destination and FOB Shipping Point affects our transactions.